Hello everyone, welcome to my channel. In today's video, I'm going to share with you my latest analysis on Bitcoin and stock market, as well as my trades during the past week and the reasons behind that. Now, without further ado, let's get into it. Same as usual, let's look at the Bitcoin first. Now we're looking at the daily time frame. So before this past week, my position was 100% on the Bitcoin. And if you follow my previous videos, you will see all my 3 attempts during this period of time. And my last attempts was somewhere around here. I entered with full position size that I allocated to Bitcoin investment, which represents around 5% of my total invested values. And until now, I still have 100% position size. So what have I observed during the past week? I can share with you my Twitter. Normally, I'm pretty busy during the week, so it's not likely I will update more often my YouTube channel at this moment. However, you can go get more timely update on my Twitter. So what I'm sharing with you right now is my Twitter on February 7th. I was trying to adjust the parameter of the MACD to test whether on the daily time frame it's a wave 4. So I was saying that the important time frame will be when the DIF value break out through the 0 axis. It will be a very important time frame for us to observe whether there might be a price turn, which is starting wave 5. And on the second day, which is February 8th, I Twitter again because on the second day, actually, the DIF value went through the 0 axis. So I was alerting everyone it might be at the end of wave 4 and price turning may start. As well, I also mentioned here that on the 12-hour time frame, it also shows a high TD sequential 9. So it will not be a good entry point if you want to increase your position size. So 1, 3, 4. So I started to test whether this can be wave 4 on February 7th, and I gave out an alert on February 8th. And then you can see that the market increased a little bit on February 9th, and then it dropped for about 5%. So even forecasted a potential price turn, I didn't sell any of my position because it's not my rule. The wave is not my rule, and it cannot be the sole reason to enter or exit. We must stick to our trading system and our rule 100%, and that this is the only way that can guarantee us a stable long-term return. Even with this 3 days correction, we cannot confirm that it's already in the wave 5. Okay, how to confirm it's the wave 5? The only way is the price creates the lower low, which is lower than the previous low, 35,091. Confirm it's the wave 5. Normally, the end of wave 5 will not be too far away from wave 3. Even the market will create the lower low. I wouldn't be so worried about it because I'm pretty sure if the wave 5 ends, we will have another bottom divergence. And very likely, we can spot another good entry again, at least for now. And before we finish with the Bitcoin, I would like to emphasize again that if you follow my Twitter, which in the description of this video, you can get more timely update on my opinion on the current market status, where it could be the good entry and exit point. Where are the points we need to pay attention to? Just allow me to give you a few examples here. So what you see here is my Twitter on June 27, 2021. I put that I see a big chance for Bitcoin to rebound now. So that is June 27 is on this day. Let's see, from the top to this day, the market already dropped for 50%. So on this day, I spot bottom structure, and then the market went a bit further down to build the second bottom. But you can see that not too much price difference here. And then you can see here is my Twitter on July 23rd. I mentioned that Bitcoin at its end of correction, quite safe now to buy for a rebound. And then you can see from there, the market went up by 64% for the first stage and went to the top by 110%. On August 24, saying that the Bitcoin is approaching the end of its first stage of the rebound. That was really not too far. And then on September 29, said that on the 8-hour time frame, I spotted a bottom for a rebound. On October 6, I'm confirming that we're in the most powerful wave 3. And then on October 20, I alerted on Twitter that we're close to the end of wave 3, which is pretty accurate. Anyway, that's enough for my examples, I guess. Follow my Twitter. You will get more timely updates and alerts from me. Now let's take a look at S&P 500. It's kind of unfortunate that last week I was not able to give an alert here about top structure around here, because precondition of the top structure is that the price needs to create a higher high, which we were only 2 points away from that. So rule is the rule. I emphasize again and again in my previous videos that we have to stick to our rule 100% without one exception. Because if we get some benefit from one exception, this could be a high temptation. We don't stick to the rule. And then one day this will lead to big risk in a major crisis. During my last video, I mentioned that I was having 0 position in S&P 500. During last week, actually on the closing of February 9th, the price went through the upper bound of long-term trend as well as the short-term trend. So according to my rule, I should actually top up my position to 100% at the closing of February 9 or the opening on the February 10th, the next day. Again, I was being super lucky that the second day the market opened low and the price fell below the upper bound of long-term and short-term trend. So I decided to observe for a little bit longer before entry. And then the day closed below both short-term and long-term trend. So I didn't enter. Am I not following my rule 100%? Not really, because I said during my previous videos that sometimes we need fine-tune. So here I decided to postpone my entry because I also set a plan for myself that once the price break out again, I need to buy in anyways. Around this level. Really, the market didn't break up again. So even on February 11, if the price goes like this, break again, then I need to buy here, which is higher than here. Doesn't matter. It's my plan. I need to stick to my plan, my rule. As a conclusion here for S&P 500, I'm still having 0 position size. When I see 2 red big candlesticks, I'm not that worried. Of course, I hate to see people suffering from the price drop. However, we have to know once price creates the lower low, there might be an opportunity of entry. Let's take a look. This is wave 1 to here, wave 2 rebound. Now maybe we're in the wave 3, so depends on the speed, whether it could be quite steep drop, and then maybe we will have wave 4 and then wave 5 to end. So at that time we may be able to spot a good bottom to enter, or if the wave 3 already start to be flatter, slowing down, and then by the end of wave 3 we could have bottom structure here. Keep in mind that when the market creates lower lows, please do not panic. Please do not lose your hope, because when the price creates a lower low, opportunities of a new bottom is coming closer. We have to keep that in mind. Again and again, it's super important to adjust your position size. This will help you to feel much easier when you face the dramatic market drop, and this can also guarantee that you have full pack of bullets to enter the battlefield again once an affirmative point appears. Last one to look at CAC 40. If you follow my videos before, you will know that before last week, I had 60% of the position size. As you can see here on February 9th, the closing price broke out the short-term trend. So actually, according to my rule, again, either on the closing of February 9th or the beginning of second day, I need to top up 40% of my position, make it a full position size, because the price stands up on both the short-term and long-term trend. So I did add 40% of my position and top it up to 100% of the position size. Unfortunately, February 11th, the closing price fell below the lower bound of the short-term trend again. So according to the rule, I have to sell 40%. One might say, hey, it's not a good feeling, entered with 40% position just 1 day ago, and then now you need to sell this 40%. Hey, this is the rule. I stick to the rule. There's no exception. And when we look at, I entered about price here, and here we're talking about 1.6% price drop. And then if you consider I only adjust 40% of a position, so it's about 0.6% of my total portfolio. This is nothing. Why I have to stick to the rule? Because see, if here the market goes up, I will have 100% of the position to enjoy the profit. And why do I have to cut here 40%? Then if the market drops, my 40% of the fund will not be impacted. And then if the price drops below the long-term trend, and reduce the position again to avoid the risk. And then what if here, and what if on the second day or the third day or whenever, after I sold this 40% again on Monday, the price will go up and break out the short-term trend again? No doubt, I will buy back 40% again. It's the rule. Actually, to be consistently profitable in the market in the long run is really not a rocket science. It's not difficult, technically speaking, because I'm only using 3 or 4 indicators for trading. These 3 or 4 indicators are my only criteria, reasons to trade. Everyone can master it. Biggest challenge is the humanity. You need to be disciplined. You need to stick to your rule 100%. You should really try your best to avoid go to an exception for even one time, because if you're profitable from this one time by not following your rule, you will always have the temptation to do it again and again and again. And this will cause, in the long run, you will not be consistently profitable, or you may suffer in a major crisis. And one important thing to remember, a profitable trade may not be a right trade, and a right trade may not be a profitable trade. Okay, that's it for today. Thanks for watching and enjoy your weekend. See you next time. Bye bye.